Hello. This video is going to be a packed video. I'm not sure yet how long it is going to be, as there's quite a bit I want to cover in this video. I think, though, I need to start with the realization of what is going on with the markets currently. Very simply put, a lot of lower quality assets are simply not going to survive. Whether it is driven by greed or fear, I don't believe matters at the moment. All that matters is that each and every individual in the market take a very hard look at their own positions and decide which ones are worth keeping and which ones are simply poor quality and need to be removed. It's not an easy decision, and there are going to be very few easy decisions coming. The market is at a transition point, whether fueled by government hypocrisy and greed, fear of collapsing fiat currencies, or a push to a new mandated totalitarian sector. Period. Really, though, none of this matters, because in the end of the day, it is not going to be the oligarchs or the technocrats or the elites that feel it. It's going to be us, the little guys, the people surviving month to month, week to week, simply trying to rebuild whatever finances we have from the lockdowns and all of the other recent economic turmoil. For some of us, it's going to be realizing that inflation has cost us 1.5 months of our paycheck, as we watch all of the basic necessities climb uncontrollably out of reach, and wonder at some point, is it ever going to end? As I said, there are no easy answers. I personally believe the market will survive. I believe it will go through changes, but it will survive. Of the 12,000 cryptocurrencies on the market, I see a minimum of 9,000 not surviving. Some of them will go quietly. Some of them will go kicking and screaming, fighting all the way, doing their best to survive. Winners and losers are going to be chosen, some by totalitarian overreach of the government, some by us for the projects we believe in, some by necessity of the infrastructure. What those aspects are and which assets are actually going to survive, that I don't know. And I don't know anyone that is going to be able to realistically predict the future in such a way. From the standpoint of what we need to do to protect ourselves, the first step is obviously going to be limiting exposure to the market by reducing what we hold and concentrating on what we believe will survive at least one or 2 years. Some of it may be taking hard losses on assets that have proven unstable. Other approaches might be finding out and figuring out ways of trying to recover as much as we can in the interim. I had hoped to introduce Equilibrium's next program in a much better light, but the market has its own mind, and sometimes we don't get to pick the best opportunities. They pick us. So today I am announcing officially in the first video Jackrabbit's official market making grid bot, the Procurator. This is, in every sense of the word, a traditional grid bot on steroids. It was previously in alpha, but it has since moved into beta and very stable. That is going to be the emphasis of today's video. I've thought about how to approach this with the Procurator. Do I want to start with theory, or do I want to just unleash it? And I think I'm going to start with theory and continue with the Patreon article, the pip and the Procurator. I will leave a link to that article in the description below, but I'm going to cover a lot of that material here because I think it is relevant to understanding the theory, to ensuring that you have the best knowledge possible. Unlike Equilibrium, which has a lot of forgiveness to it, the Procurator has no forgiveness. It is laser surgical precise. And I'm actually going to demonstrate that with a spreadsheet. So for now, looking at the chart, I have this particular coin, Audius. I have a small position of it, and it has been a pain to get rid of. So I am going to get rid of it through grid trading. I'm going to recover what I lost from this coin. Because of its price action being so minute, I need to approach this in a very special way, a very surgical way. Equilibrium does not work well here because the range of profitability is so small. I can't afford any negative slippage here. Equilibrium is driven by market orders, which is how it is able to accomplish a great deal of profitability. The Procurator only uses limit orders, so I never have to worry about negative slippage. And for the context of this discussion, negative slippage refers to the price going against my position, where I actually lose money in trading. So without further ado, let's really take this chart apart. Audius has been a complicated coin. It has a history of a very short term, and probably one I should have stayed out of to begin with. But I didn't, and I thought it would actually go someplace. Well, it is going someplace, just not where I wanted it. So now I need to recover what I've lost, which is 50% of its value. But as you can see from the price action, it's not that strong of a coin. When I got into it, it was at $1.8, and it looked like it had a very promising future. My, how things have changed. But that is really irrespective to the point of where we're at now. If I could go back and tell myself not to purchase it, I would. But I purchased it, I own it, now I have to get out of it, preferably without a loss. So the Procurator is the best way to manage this situation. And as you can see on the left-hand side, under the word TradingView, we have the height of a range that started last month. Prior to today, or really within the last couple of days, we had a pretty stable price range. On the 13th, the price dropped below the consistency of the price range. But nonetheless, it is still a working situation. And it is still very profitable coin. So with a low of roughly 0.25 and a high of roughly 0.5, we have a spread to work with. That spread gives us a range. That range gives us steps that we can make profits as the price fluctuates. The limit orders will guarantee that we make a positive profit in both directions. We are now looking at the spreadsheet of the chart I just demonstrated. With Audius as the coin, the high range I chose to demonstrate for simplicity is 0.6 or 60 cents. The low range through analysis is 0.2687 or roughly 26 cents. The average price range between the high and the low is 0.4344 or 43 cents difference. Or 43 cents as the average price. My spread, or the difference between the high and the low, is 33 cents. The percentage difference from the low to the high price is 131%. Now that gives us 131 steps. So what we're doing here is I'm looking at a 1% profit per each grid, which is why we have 131 steps. Now from the market standpoint, using traditional market nomenclature, that is roughly 25 pips. A pip specifically equals 0.0001 or 1/1000th of a penny. That is the standard stock and forex market terminology. This is how a lot of traders talk when they deal with very small fractions, because it is simply easy to understand and easy to communicate. For the standpoint of a traditional grid bot, that nomenclature needs to be maintained because we are only dealing with 33 cents spread or a 33 cent range between the buys and the sells, or basically 131 limit orders. And how this actually works is each limit order has a selling value and a buying value that they oscillate between. So when you first set up your grid bot, it will start out at 0.5975. It will make a purchase if the price goes below this value. Then if the price goes above 0.6000, it will make a sell. And it will oscillate between these two prices with the pip value of 0.0025 or 25 pips. This will produce a 1% profit. Each grid will be 1% profit. So if the price sweeps from the high to the low and then back to the high, you will make a 131% profit across that entire grid. These values are significant. As you can see, each price category is fixed. You are specifically working at very surgical layers. Those layers need to be calculated out carefully and concisely. This kind of a spreadsheet can help you do it. Typically speaking, this kind of grid trading is meant for expert use. You must study and understand the asset you are trading. You must take time to research the asset you are trading. No amount of fancy programs is going to make this easier. This is a high precision tool designed for a very specific look of the market and a look at the market. The analysis level is critical. This kind of an approach can easily be very profitable very quickly, even against stable coins. Or it can be very costly and cause a lot of heartache. When you start dealing with fractions this small, your price boundary becomes immense for your budget. Let's just take a very basic outlook of this asset. We have 131 steps. If you invest $1 per each step, your budget is going to be $131. That means each profit boundary is going to be 1 penny. 1% of $1 is 1 penny. So basically, a full sweep of this entire grid will give you a profit of $1.31. These kind of grids are very lucrative. A $10 grid step would require $1,100 budget, but you would be making 10 cents each grid profit. And for a market that has high volatility, that can add up quickly as price oscillates between the buys and the sells. This is why grid bots are so popular as market makers, because they can react to very small fractions and not take negative consequences typically associated with market orders, because this is driven purely by limit orders. Now, your exchange will decide whether or not you have the right to get a market maker designation. But if it does, that will only accent your profit all the more. As you progress with your analysis, you must take care to make sure that each grid is above your minimum fees, and you must count your minimum fees based upon your taker fee. Do not count the maker fee. If you do, you will lose money. Exchanges like FTX have openly written that only 25% of all limit orders actually achieve a maker status. The rest are charged a taker fee. Plan for the worst case fee structure. That way, if you do get the maker fees, you are only going to be that much more into your profit basis. I cannot emphasize the care needed to make sure you understand just how surgical this mechanism really is. Now we are looking at the XRP chart. I want to demonstrate this process and really go through how to begin thinking about your grid levels. There is a definite mathematical process to it that is often used to decide how you actually build your grids. That is what I want to cover now, using TRX as my example. Now, this is not going to be openly accurate, and you do and should use accurate mathematics. But I want this principle to be easy to follow, so I'm going to try to keep the numbers easy to follow. So let's say TRX high of 9 cents. A TRX low of 5.50. Okay, with the information from the chart, I have filled in the spreadsheet, and we now see our high and our low. That means our average price range is 0.0725. The spread of this range, or the distance between the high and the low, is 0.0350. There is a 207% profit basis between the high and low. At 1% intervals, that gives us 207 steps. And each interval is 2 pips. So we see here through the chart, our sell boundary is 0.09, excuse me. Our buy boundary is 0.098. Again, this surgical level is simply not possible in percentages. You have to use very tiny numbers. And that is the whole point of this process. very tiny numbers. Such an approach has a limited scale. If the price goes above this, everything shuts down. You have literally sold off everything you've owned if the price goes above 0.9 cents, and the gridbot is out of business. It will sit and wait for the price to drop back down into this range. If the price goes below 0.0550, your gridbot will simply sit there holding TRX, hoping it recovers. I actually have this situation right now with audio, and it looks like it is going to go back in range. There is no way of knowing if the price is going to stay in range, so what you have to do is look at your high and your low. Add 30% to the high, subtract 30% from the low, which gives you a larger range. And that will have its own consequences and impact. From the standpoint of your exchange, 207 grid lines will have an impact on how fast the orders are processed. It will be twice as slow as a grid of only 100 steps. That is something you will need to weigh out with respect to your exchange. For example, with KuCoin and its rate limits, I have tested a grid of 800 different steps. Depending upon how volatile price action is and how many orders flip from buy to sell or sell to buy, I may end up taking 2 minutes to 6 minutes to process that entire grid. And I have seen and done extreme cases that have taken up to 40 minutes to completely process a full, complete grid. So you will need to be aware of and factor in your exchange rate limits. I'm going to wrap this discussion up on the chart as we look at it and you try to figure out what your range is going to be. Search every time frame. Look at them carefully, because you are going to end up playing a guessing game on the basis of your high and your low. You're going to have to figure out and calculate your risks. Every grid requires a reserved amount of money up front. So using the TRX example I just demonstrated, if each grid line is $1, I need $207 up front. That money is reserved immediately as soon as the limit orders are placed. If you don't plan your budget properly, you will be left with a big fat mess, because this entire process lives on the exchange. The Procurator does its best to minimize impact as it can, but it cannot recover from bad planning. It cannot recover for not properly figuring out your budget ahead of time. Unlike Equilibrium, that can grow and change as needed, everything with the Procurator is done up front. It makes all of the limit orders right in the beginning, and from there, it simply watches what the exchange does and records and reacts to it. The decision-making process that drives this whole mechanism of a grid bot is controlled solely and purely by your exchange only. I must emphasize, you take caution and care on your coin choices. It will work on any coin your exchange offers. But if you pick a weak coin, you are likely to find either one, it won't make any real profit because the price is too low, or two, you will take on too much risk because the price is not sustainable through trading volume and liquidity of the asset itself. Unlike equilibrium, the Procurator is an expert tool. It requires expert precision. Take your time because it cannot be paper traded. I can run through theory all day long, but because all of the orders live on the exchange ahead of time before anything else is done, the only way to know what is going to happen is to watch your exchange. The Procurator lists everything in your exchange order book. And that is why it is so unique and so powerful. It literally runs through all aspects of your order book. For better or for worse, your order book is the deciding factor of your thinking process. You need to research. You need to learn the coin you want to trade with this tool. And you need to think defensively in the event that the market changes quickly. This tool is a rags to riches story, or a riches to rags story. You are the one that decides that outcome. Now, I know I'm going to be asked ahead of time. Before I am asked, I'm simply going to answer it now. Yes, a futures version is in the works, but I want to get the beta fully tested and made sure it works properly before I try to tackle that. The futures version is going to be exponentially more complicated than a spot version, so getting all the bugs fleshed out early is critical. I'm going to wrap this up here because I've covered a lot of information and this is probably pretty dense. So like, subscribe, leave comments. Let me know what you think about this process in terms of other grid bots. Do you find this going to be more productive, or do you think it's too complex? Leave me some suggestions on what might help make picking the ranges easier. Who knows? Maybe a program will come out of that can help make the analysis portion easier to conduct. Until next time.